Most investors look at Polo Marine and see a traditional tug and barge operator. But if you look at their latest FY2025 report, something huge is shifting under the surface. They just launched a high-tech wind vessel that's already making money, moving away from oil and gas, landed a record-breaking $198 million contract, and they are planning a secret weapon, a spin-off IPO in Taiwan that could unlock massive value for shareholders. Today, we're breaking down Polo Marine's 2025 financials. Is this the start of a multi-year bull run or just a temporary bounce? Let's dive into the numbers. Hi everyone, I'm Singa Polah, helping you catch up with earnings reports and other important news from various Singapore-listed companies. Before we continue further, this is a disclaimer. The content presented here is meant purely for informational purposes and is not financial advice. Singa Polah assumes no responsibility for the completeness or timeliness of the information and is not liable for any errors in this presentation. Here's some background for those who are unfamiliar with Polo Marine's business. They operate in two main business segments, ship chartering and shipyard. In the ship chartering business, they own and operate the vessels and charter them out to oil and gas as well as offshore wind farms for their operations across the region. As they can design and build the vessels, they can customize it according to the requirements of their end users and repair them quickly in their own shipyard. The shipyard business thus come in handy, especially if the chartering business slows down and they can make money building other vessels for other purposes like research vessels. Now that we have a brief idea of what MPM does, let's look at their FY 2025 numbers. Revenue is roughly unchanged compared to last year, while gross profit and earnings before interest, tax, depreciation, and amortization improved moderately. Importantly, margin expanded to 44% from 39%. This shows a strong growth in profitability. Adjusted net profit, however, showed a slight decline of minus 4.2%, reflecting the investment phase before new assets contribute to a full year of revenue. Diving deeper into the ship chartering segment, we see that revenue is up 11.5%, driven by higher charter rates and utilization rates. MPM also successfully launched their Wind Archer in Taiwan, and this proves that MPM can execute on high-tech wind vessels and is ready to capture the opportunities in Taiwan. Current order book is also at a robust 100 million, providing earnings visibility into the next few quarters. Next, looking at the shipyard segment, we see that revenue declined 17.4% year-on-year to 42 million. The fall is mainly due to a decrease in shipbuilding orders, partially offset by ship repair orders. That said, the segment remains resilient with the increase in capacity on the launch of the fourth dry dock, which secured a 5 million maiden contract with Siam Renewables. Even with the expanded capacity, the shipyard continues to achieve a high utilization, operating at an average utilization rate at 87% in the fourth quarter this year, compared to the 83% for the entire year. Importantly, MPM won a 198 million contract to build a 4,000-ton oceanographic research vessel for Taiwan's National Academy of Marine Research for the next 4 years, suggesting that the revenue for the shipyard segment remains resilient. Polo Marine also reported a healthy balance sheet with a net asset value of 264 million, a net cash balance of 9 million. This strong financial position allows MPM to self-finance major projects like the new ORV and pursue growth opportunities. But what kind of opportunities are we looking at? Polo Marine has announced the plans for listing of its Taiwan subsidiary PKR Offshore. This listing is important because Taiwan is the epicenter of Asian offshore wind. Pure-play wind companies in Taiwan often trade at a much higher valuations, 14 to 20 times PE versus 8 to 10 PE for Singapore marine companies. This could unlock hidden value for MPM shareholders. The next growth catalyst is the order book and fleet expansion. We have also touched briefly on this. MPM has a robust order book both for the shipbuilding and the ship chartering business. MPM will also be adding 2 new vessels to its fleet next year, allowing them to better meet the increased demand for both the oil and gas and offshore wind market. They are also building a new CSOV Plus, which is a larger hybrid battery next-generational vessel, slated for delivery in Q2 2028 to capture future growth in offshore wind market. This is important because this is an entry into the premium segment of the offshore wind vessels, suggesting higher margins in the future. As wind farms move deeper offshore and into rougher waters, more premium models are needed to deal with the harsher environment. Management has also offered an optimistic industry outlook where the offshore oil and gas industry continues to have a favorable outlook due to supply constraints caused by prolonged underinvestment during previous market downturns. Offshore wind sector is also experiencing growth, driven by heightened investments in the energy transition and a strategic emphasis on energy security. With its strong balance sheet and business model and future growth catalysts, MPM is well poised to continue to execute its growth strategy. If you believe Asia will continue building wind farms, Polo Marine is the picks and shovel play to watch. If you have any questions about MPM or its numbers, please contact their investor relations. And that's it for me today. Does the Taiwan IPO make this a buy for you, or are you worried about the flat revenue? Let me know in the comments below. Don't forget to like and subscribe for more deep dives into other financial reports. See you in the next one.